This is the One Point Podcast, and I'm Rohit Yadav. Research is a cornerstone of any investment process, serving as a critical tool for making informed, strategic, and profitable decisions. Research process tends to minimize uncertainty, enhances strategic planning as well. And by building a foundation of knowledge, any investor can build more resilient portfolios and maintain a competitive advantage in the dynamic world of investments. And while research as a function is very well established in the equities asset class, the topic flows under the radar in the venture business. And to shine light on this increasingly important topic in the venture space, we have the perfect guest with us today, Santosh Rao. Santosh, thanks for joining in.
Thank you. Thanks for having me.
Let me quickly introduce Santosh to you all. So, Santosh has over 25 years of experience in the financial services sector, 20 of which has been as an equity analyst. He started his equity research career at Prudential Securities and later worked at many investment banks as well. He's currently the head of research and partner at Manhattan Venture Partners based in New York. Santosh has a double undergraduate degree and an MBA in finance from the US. Santosh's work is cited frequently in the financial journals, and he appears frequently on business networks, prominent ones like CNBC, Bloomberg, CNN, among others. So, Santosh, this is like a perfect profile to discuss today's topic of how much research is important within the venture space. So, I'm glad you could join.
Glad to be here. Looking forward.
Thank you so much. So let's dig deeper into your journey till Manhattan. So you spent 20 years as an equity analyst. Walk us through all those major kind of buckets where you worked, like major areas where you worked, how you progressed through your journey and so on. And give us a sense of how much research has evolved in those last 20.
Absolutely. I think that this is a topic very close to my heart. Been in this business for quite some time. So pretty much from the beginning, I would say I realized the value of research. I realized the value of market intelligence. All things equal, I realized that the research gives the company a cutting edge in terms of the business model because now information is freely available. So
Mhm.
when I started, which was in like late 80s, things were different. Information was very tough to get. Only the analysts knew everything. The public information was limited, and now you have the fair disclosure or all that. Companies cannot disclose any information selectively; they have to announce it to the world. So there is no advantage in terms of information. So in the past, the big companies, even when I worked at Prudential and at Payne Weber, Goldman and Morgan, and they had the edge because the companies, the CFOs used to call them directly and say, hey, this quarter we're going to do 20 cents a share. I mean, directly, we had to do triangulate at this and that and build our models, but they used to get directly from them. So
Mhm.
that advantage. So everyone relied on their information rather than ours. But we kind of built on that. We piggybacked on that. But we had our own analysis. But so research was important, always has been. So I started there in the early stages in Prudential as an associate, doing the grunt work, writing, staying up all night for late reports. All the tech companies were on the West Coast. I work in the East Coast. So they report at 5, which is almost 8 o'clock here, or they report at 3, which is 5 o'clock here, things like that, 3 hours ahead. So it was always very inconvenient. And then after you're done with that, then you wait for the CFO to call you. So we reconfirm the numbers. Then you change the model, write the report, and get ready for the next day. So you're not home till like 5 or 6 in the morning. Go back, take a shower, come back, and just kind of do a presentation to the sales team. So that was the drill for the early analyst in those days. And I went through that, which was very grateful. So, and I covered the technology sector. Then I came at a time when the dot com bubble was really coming up a big time. So I think I saw it from ground level. And we were doing a lot of deals also on the investment banking side. And in those days, the wall between investment banking and research was not that rigid. The Chinese wall was kind of porous. I mean, they were not
Okay.
very strictly enforced. So the bankers worked with the analysts worked research, and research worked with the investment banks. But then after all the regulations that happened and all the scandals that happened, they put a strict wall. So research could not share in banking revenues, and they could not talk to bankers unless you had a compliance. So went through all that stuff. So research took on a different shape. Suddenly the commissions died, the salaries died on the public side because you couldn't share in the investment banking revenues. I mean, research essentially drove banking revenues. I mean, the
Hmm.
banking pitch used to
True.
be in those days, you go to the company and say, hey, you come with us, do this deal, and I'll have my analyst cover your company. That was the big selling point in those days. When that thing stopped, that became a problem in the sense the revenue flow for research kind of was how much you generated in commissions or your sales call or your research calls. So all that became more and more important. So things like that. So it went through a challenge. The whole business model became challenging after a while. So I worked there for a while through Prudential, went to Dresdner, Kleinwert, Wasserstein, and a few other companies. And then at one point, I thought, when you have 20 analysts covering a company, especially like Cisco or anything that I used to cover, there's no point. You don't make a difference unless you're a Goldman or a
Hmm.
Morgan. So what I decided was move to the private markets. And at that time, I'm talking now 2010, 2011, the private markets were booming at that point. People were putting in millions of dollars into private market, not knowing what the valuation is. It was all word of mouth. There was no formal research at that time. So my boss at that time, he said, let's start a sell side function on the private side, private markets. So that's how research came on this side. And I started writing reports where our clients were T. Rowe Price, Fidelity, and all of them. So they wanted to know. So when you go in front of the research, especially in the European countries and Asian countries, rather, you really can't say, hey, let's buy this. You have to present you have to make a case for it. So research played a big part. They used to take our reports and say, hey, let's invest in there. So that way research became important and more it became institutionalized. A lot of companies also picked up on writing research on private companies, but we were there right up front. So we did Facebook, Twitter, LinkedIn. There was like a boom in all these companies, the
Okay.
social media companies, you can call it, or tech-enabled companies, software companies. Ultimately, they were software companies, the internet companies. But so that became really important. People valued our research because more than valuation on the private side, it's the industry knowledge that portfolio managers are looking for because they have their own sense of where they want to get in, how much they want to make, and they have their own analysis. But what they
Hmm.
need is a confirmation of what the industry is like. And we talk to the founders, we talk to the clients, we talk to the
Hmm.
sellers. So we had more information on the ground, and that helped them. So that's what the that's what I enjoyed. On the public side, yes, we did our research, we did our thing, but it became very difficult to differentiate yourself. So I said, move to the private side. And that's where I moved to Greencrest Capital, which was another boutique shop. And then from there, that was bought over by Oppenheimer. So I moved here to Manhattan Venture Partners. So that's what we do. Essentially, market intelligence is the difference between a good company and a bad company. Because now trading is technical. It's not like before. It's
Yep.
all, you pay 1 cent, 2 cent, whatever on the public side. So market intelligence is taking more and more importance. And on the private side, the research is huge because all things equal, because everyone comes to you with a pitch. Hey, buy this, buy that. Let's buy
Hmm.
SpaceX, buy this. But then when you give some numbers behind it, give a thesis behind it, that helps. And that was my role. So I cover all the technology TMT companies, and we did Pinterest, Spotify. We were huge in Palantir. All these are our babies, and we invested huge money. I mean, Palantir, we were at $3, in the beginning. Now it's $60, but it was a dog for so long. And the limited partners that we got into Palantir, they were complaining. I said, "Hey, when is this thing going public? Because our money is locked up. Every year you say, that it's going to come. It's coming. It's coming. It's coming." And so exits is important in venture capital. Exits is important because that greases the wheels, that keeps the ball rolling, so to speak. So I think that was important, and that was kind of slow at one point. Then it picked up, then it stopped. It stop and go. But essentially, you need exits at the end of the day. And so we covered a lot of companies. So
Hmm.
there's a lot of LPs that you need to keep them informed, tell a story. You give sales guys a reason to touch point. So that was the whole purpose of research, to be a pull document essentially, to take it out there. Hey, my the sales guy calls them. Hey, you know what? My analyst just wrote this. Whatever we published. but that was not the main reason. That's a touch point. They liked the research, but then hey, then you tell them what all you have, what all you want to sell, what all is available, things like that. So you know the game. You're an expert also. So I'm just trying to kind of state this, probably state the obvious for some people, but for people who are kind of new to this field, I think it's very informational because I get a lot of calls. What exactly do you do? Because VCs are now big time because people are looking for growth and they're not getting it in the public markets, except for the last few months or last few, I would say. But essentially, there was no yield in the market, there was no growth in the
Yeah.
market. So they had to go down the pike to the private side. And suddenly, you had crossover investors, hedge funds, and traditional, well,
Yeah.
they all came to the private side and they really boosted up. So you saw valuations like Series C, Series D valuations going to 1 billion, 2 billion, or seed valuations going to millions, because now all of a sudden there's new money because they want to catch up. In the IPO, you don't get too much allocation. That's a big problem. So everyone decided to come down the pike, come in early, get a position, get a big position, and say this. So that's how. So this space became very popular. I would say in the last
Okay.
10 years, more so 5 6 years, a lot of money flowing in, and that's what you saw. So I think that's the whole purpose. That's why I got in. It's exciting. There's a lot of activity, a lot of action, and you can make a difference because in the private markets there is no perfect. In the public markets you write something, but people say, hey, Goldman
Yeah.
is saying that or Morgan is saying that. But here nobody knows anything. It's your research that will decide what's right and what's wrong. So if you present a good thesis, a good logic, you present a good model, that's it. That's the standard. So Goldman reads our reports, Morgan reads our report. In fact, we trade through them also. We provide, they come to us for their private clients. If they want to buy some private shares, they will come to us. We feed them. So we do a lot of back and forth. So we play with the big guys also. So that's
Uh,
it.
Glad to hear such an amazing journey, career journey, Santosh. Amazing. And I think I really liked what you mentioned. You saw the action being shifted from the public markets to private markets. And it made total sense for you to jump the wagon, kind of, change or pivot your career and jump to the private markets because here the research has much more value in terms of presenting it to the LPs or maybe VCs and so many other players on what really is happening. And that is what research really does, right? So in public markets, the price is known, there's much more transparency. So the ability to kind of uncover the truth lies in the private market. So research is such a fundamental kind of backbone right now.
Yeah, and the biggest pushback you get on the private side is, why should I invest with you when I can wait for the IPO and invest with known information? Right now, you don't have access to information. It's your research that we have to rely on. I would rather wait a year or two and then get on the phone. But we've done reports, and I'll be glad to share it at some point if anyone's interested. We've done research. We looked at all the returns from people who invested in Series A up to IPO, what happens at the IPO, Series B, Series C, Series D, all of them we did by round, and we found that people who invested in Series C or D, that was the sweet spot, they made the maximum gain at 6 months after the IPO, at the lockup expiration. So
Hmm.
their return was almost 60% versus 10% for at the IPO. The IPO is a coin toss, right? I mean, like you get some up and down, up and down.
Yeah.
But on the private side, you get that tremendous upside. So we have data that shows that it pays to get in early, and it made our point, it made our case, and it was our pitch book. It was our pitch in our pitching deck, rather,
Yeah.
on a marketing deck, where we showed people that, hey, you get in here and there. The big risk is same thing. It's an opaque market. Why should we get in now? But then if you get in when it becomes a household name, when you get in when it's at the IPO, it's too late. If you want alpha, that is. Of course, you can get in over the long term. But if you're looking for alpha, and our guys, they're rich guys, they want to get in the money, they want to get 2x, 3x, 4x, get down and recycle the money into new ideas. They're not the public guys. Ours are 3 years, maybe max, that they want to invest in. So
Got
three to
it.
4 years. So for them, this is the best thing.
Got it. Got it. So we covered your journey till Manhattan Venture Partners, and you touched upon a little bit about what you're actually looking at, how others are viewing what you're doing, and so on. I really want to, for the next question, dig deeper into what really is Manhattan Venture Partners for the people who don't understand it. So, what are the different areas that you work into, and how is kind of research embedded in Manhattan Venture Partners as a company itself? So, what really is your kind of day to day job there, and so on? So, if you can
Sure.
talk more about that.
Absolutely. I'm the head of research at Manhattan Venture Partners. I have a big group that works with me. But really, we are a research based merchant bank, you can say. It's research driven. There are a lot of people that do transactions. You'll see a lot of companies popping up and this and that. They're more transaction oriented. That you get a buyer, you sell her, boom, boom, you keep 2 cents, three
Okay.
cents. And that's been there for a long time. But what we do is we have two or three sides to our business. One is we started off as pure secondary market players.
Okay.
So we made a market in secondary shares. So you are an early investor in Pinterest, let's say, you want to get out, you come to someone like us. We have a whole list of family offices, wealthy family offices
Mhm.
worldwide, in Chile, in Mexico, in Turkey. We have offices all over in Europe, in London as well, and then a few other places. So we have our big money, big family offices that don't have access to US markets, and they're
Okay.
hungry for US companies, early stage companies. They don't want to miss out on the next Facebook. They don't want to miss out on the next Google. They want to get in. So they come to us and we have easy. So that's how we started originally. We were big in Spotify, we were big in Palantir, all that. And then we started doing what we call funds. So we
Okay.
manage funds. We are just closing our fifth fund. I think it's a $500 million fund. So in fact, my managing partners are traveling right now in Middle East, but they're raising funds for that. So we have three or four funds. So we manage that. We take money, all the LPs invest there, and we manage those funds. Then essentially we do a lot of banking also. If the company wants to do a liquidity event, we can manage their liquidity event. If they say they want their employees to sell their share, so we can manage that. So we have that service as well. So we have banking, doing all the deals. Then we have the fund management that we do, and then of course the regular sales guys are always there doing one-off deals. Like suddenly you
Okay.
might come, hey, do you? I write reports all the time. So let's say I put out something on Glean. They say, hey, do you guys have shares of Glean? So it kind of pulls people in. That we may not have shares, but then we can call up our network and say, hey, Glean is there. Then boom, 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 get a market and we get
Got it.
things like that. So that thing goes on. So it's really that's how we make our money in banking. In we have recurring income on the fund side, and then so I sit on top of this. I'm like the funnel. I look around. I have an open mandate to just go out early, learn the technologies, write about them, and just talk about it. Every Monday morning, we have our meeting where I present an idea that I think is worthwhile. And then I have a monthly report called a Venture Bites that it has two lead articles on something topical, then all the news items that I think are relevant with my commentary there. And then I have private comms, public comms, and then what
Mhm.
I have is a proprietary liquidity watch list. I follow close to 300 private companies on my radar. So out
Wow.
of that 25 companies, I rank them that I believe are in queue for an IPO in the next 12 to 18 months. So that's my goal. So I kind of highlight that. And so that comes out. So there's enough information, the market intelligence out there to keep the pot boiling or stirring rather. And so that's my job. So essentially, that's what I do: write research, feed ideas, so they may pick up on something like Anthropic. Everybody was talking about OpenAI. I bought Anthropic in the morning call meeting, and they're like, "What is it? How do you spell it?" So it's like this, that, and that. They took it down, the business development guys, and boom! Next thing you know, you're invested as investors there. And there are some mishaps too. If we had got in at the right time, just before Amazon came on, we were about to buy up all the FTXs. FTX was big in Anthropics. We were going to take over all their shares. But last minute, of course, there's what do you call the ROFR is there. The company has the ultimate decision as to
Yep.
who they want on the cap table. So last minute, they decided not to do it. Later on, we found out because Amazon wanted to get on it, so Amazon got it. So things like that. Those things happen a lot. It's very that's the downside of this thing of not downside, that's a challenge of this. Just when you think everything's lined up, there's money in the bank, investors are excited, boom boom boom, company said no, we're
Yeah.
pulling it out, we found someone else. So anyway, things like that happen, but we are in it. We came in through something else, some other vehicle, because we are in the ecosystem, so we know the right people, things like that. So my role really is to kind of drive the process. There's a strict compliance wall, Chinese wall. I cannot, because I don't have, they have NDAs on that side
Yeah.
because they do, they can't share any information. But many times they feel I'm too conservative. You research guys are like, because they've actually seen the companies, they have seen the statements and all that. So they are, but they said that's fine. I'm going to keep you honest. This is an independent opinion based
Okay.
on the facts. So they can take it from there, and they can say up, down, up, down. In fact, they told me to slow down on CNBC and all that because they feel I'm not bullish enough. The sales guys want everything to be like the best thing ever, and whatever they're doing is like,
Everything rosy, right?
yeah. I said, you know what, I can't be because I have my reputation too. So I just go very systematically. I say it's good company, bad company, things like that. So that's
Got
where
it.
it's at. So that's my role as a research guy, sitting on top of this company that has banking, that has trading, sales, banking, sales, and on top of that, I do
Got it.
that.
So we covered a lot of track right now. I want to touch upon point by point couple of things that wasn't like 100% clear to me as well. So the funds business that you have within Manhattan Venture Partners, is it focused on direct investments into startups or is it also focused on secondary transactions?
Well,
The,
we will source it through secondary markets, or some of them we might go directly. Like DraftKings, we went directly. We were
got it.
primary in there. Originally, we buy all the shares, and we have created a fund, and then you can buy into that fund. So
Got it.
that's the game that goes on there. So mainly secondary. Initially, we buy it at a discount in many cases, but some cases we go big. I think Anthropic we are primary, Grok we are primary. I think so. Things like
Wow.
that. So it's very.
Wow.
I mean, they don't tell me exact details as that, but on the website you can see where we are and what we are
Got it.
not.
Got it.
So essentially, I would say secondary and primary. We source it different ways.
Okay.
So.
So I want to capture the second part and the major chunk of what you are doing over there, right? So it's so important. So you said research kind of sits on top of all the functions in a way. And the way research is designed is your ability to bring forward ideas on a weekly basis is one of the fundamental reasons for the company to progress in a way, right? Because if you bring good ideas, nice ideas which a lot of people haven't covered before, as you mentioned one of Anthropic, right, there is this ability to get in early at the right price and capitalize on that
Right.
for your clients itself. So help us understand how does your typical day look like, right? And so that the audience gets a feel of what does really happen in detail in practice.
Yeah. So I have an active team. I have two full-time associates. Then I have a design guy and all that. And so we have a good support system. So my day is essentially staying on top of the developments. So I
Okay.
read a lot of blogs. I talk to people. I talk to VCs. I talk to people in the ecosystem essentially. So I try to learn the technologies that's going on. Right now I'm ramping up on AI, machine learning, think what's going on. What are the applications that are coming down? What are the
Mhm.
variations of chips that are like Cerebrus has a different type of chip than Nvidia, so they want to compete with Grok and all that, things like that. So trying to get into the nitty gritty of that. So I mean, I've been a technology analyst, but I don't have a technology degree. I'm not an engineer, but I definitely have a full understanding of, I don't need to be an engineer because when I was a
True.
telecom analyst, I had a telecom directory. The first day my analyst did was just memorize everything, So he gave me the full book. So CDMA, this and that, GSM, all the technology. I came in at that time because wireless technology was just about to come in. So AT&T, Verizon, they were about to spin off their wireless divisions and start at 7. So that's when, so we initiated cover. I was at Dresner at that time. So we initiated at AW, AT&T Wireless, Verizon
Hmm.
Wireless, T-Mobile, and all the other different regional companies. So those were interesting times. The spectrum auctions and this and that. So it's a lot of reading to them. One thing you have to do if someone wants to get into this, you have to be a voracious reader. Read,
True.
constantly reading. So I am like, I have all the CNBC and all that going on here, just in case. I go on media quite a bit, so suddenly they may ask for a comment or something. So I like to know what's going on in the
Okay.
like tonight. After this, later on at night, I'm booked on a call for Indian TV. It's a Times Now TV, a Times Now Business Network. So basically, they want to know what's going on in the U.S. markets. Is it up, down? Is it a bubble, and things like that? So I try to, it's a panel discussion normally, and so things like that. So I try to stay in touch with the market on that side. But
Okay.
my team, we have projects. We have an industry report that we're working on right now. The other guy, we just finished an initiation report, all that. And then we have a best ideas report that we're working on for the venture bites for next month. So there's a cycle from first of the month to 10th month. We are busy with venture bites, which is our monthly thought piece.
And I've
And
read it.
then
It's brilliant.
thank you. So we do work on that, and then we get it out, and then we have, like I said, industry report, issue, and then we want to do a webinar. It's getting pushed out. Normally, we do a webinar on Outlook series. So we do it in conjunction with Bloomberg, where they have the expert from there, and then me and another, maybe somebody in the industry. We call them as a guest, and so they will. So we kind of give ideas on the webinars,
Okay.
and it's all my research, everything is available on Bloomberg, so you can access it. If you have access to Bloomberg, all the webinars, everything we do is on there. So anyway,
Awesome.
so my days, it's all about reading, watching, assimilating, and connecting the dots, this, and then putting it on paper down the road. So that's the idea essentially. And meetings, you call up people. Sales guy can call and say, hey, can you talk to this person? He's really interested in
Yeah.
this. I'm not able to explain everything. He read your report. He has a few questions, so they'll get me in front of them, so I'll talk to them.
I think one point that
I had
I
gone
think
to
one
chill.
point that you're really highlighting is it's not just about reading, it's not just about consumption of knowledge. It's also about the output, right? How you're going to structure that knowledge, filter that knowledge, analyze it, and then create meaningful ideas out of variety of sources, right?
Yeah,
How do you find the gems or the diamonds from all that data
yeah,
that is available to you? That is kind of become that becomes the fundamental thing. And
yeah,
the research function, as you mentioned, is not just about a siloed function that you're sitting alone and reading on laptop or listening to the audio and podcast and so on. You have to discuss it with your colleagues, you have to discuss it with people from outside, as you mentioned, gets from Bloomberg, right? So it is not a siloed job as probably a lot of people might think about. It involves a lot of discussions. It is a community based approach. And one of the points that maybe you can correct me or not, the way investment process happens, the way finance world moves is that if you haven't built a conviction on an idea, then there's always inherent risk in something that you're investing into. And so research is kind of fundamental to any investment process. And without having a good idea about where you want to and why do you want to invest into something, there's always hidden risk. And then it depends upon the investor, right? Whether they want to take those hidden risks or not. So I
yeah.
think this ideology of a lot of people think about when, especially the youngsters, they are thinking about research as single person working on the laptop and not being able to doing a more meaningful work in the VC industry. I think this notion is kind of incorrect.
Absolutely, actually, that notion is, in fact, it's very interesting you brought this up, because the first thing when I was an associate and started, when I was writing reports, was essentially taking the company line. Company always puts their best foot forward. So you take that, and you write that, like the earnings reports. Everybody, research analysts, during earnings times, everybody wants to get on the call and talk about, and they just go over what happened. So the
Yep.
sales guys told them, It's no use. After the earnings call, it's too late. The sales guys, especially this, I'm talking about the public markets, especially. So there's no use. You have to make a call before the earnings happen. So, and then the head of sales one day pulled me on the side and said, "You're not 1-800 company. You have to take that information, go underneath the covers, kick the tires, and tell me something that's not out there." Everybody reads Wall Street Journal. Everybody reads New York
Yes.
Times. Everybody reads all the journals. So it's the same information set, but a research analyst will connect the dots and make a theory, make come up with something, a mosaic approach, like they say, and come up with a cogent thesis that has some investment value. So same thing. You're not reinventing the wheel, but you are really taking that thing and
Yeah.
creating a nice product out of it. So every day something's going on. So the sales guys use. So what happens is earnings times. All the research analysts have something to say because the company just reported, and between the earnings periods, nobody has. The sales guys just, where are all the analysts? So he said, that who cares about a research analyst if he's plugged into his business has to say has an opinion on everything that's going on.
Yes.
So,
True.
so when I was at Prudential, he was there. I remember that guy specifically said there was a currency devaluation in Argentina at that
Hmm.
time. So the food analyst came on because it affects him, Archer Daniels and all those guys. So that sales guy was saying, look at him. He always is plugged in, and he's not connected to what Archer Daniels is doing in America. He has a global view. Similarly, everything that happens, the devaluation, appreciation, this, that, the
Hmm.
war going on, it has an impact on your sector. So you should talk about it and highlight it before it's too late. No point. Once it hits Google, and I tell my team, if I get whatever you wrote, if I just type it on Google and the first thing that shows up is that what you just said, it's no use. Everybody in the olden days you could get away with that because not everybody had the bandwidth, the broadband, the connectivity, and all that.
Yeah.
Now, instant, everybody knows everything. So you have to go over and beyond that and be intelligent about it. So that's the big challenge for my team, and that's what we
Got
try
it.
to do.
Got it.
So
Um,
yeah.
you mentioned about the public markets right now. So, how would you differentiate research within the public markets? Because you're the perfect person to talk about it, and the research in the private markets. So, how would you differentiate the setup?
Yeah, so private market research is more thematic because you're talking about this is an emerging disruptive company because by nature, by definition, private markets are disruptive. Because if you have the same old product that's out there in the public market, what's the
Hmm.
use? No one's going to buy it. There's no point coming up with another Spotify when Spotify is doing well. So you may want to do something else with that. So private markets are more thematic. They are more. They're not valuation. Valuation is secondary at this point because they want to know what's the emerging technology, why is it better, where is it going. But on the public side, it's more kind of reactive in many cases. But there also, if you tell a good story in the overall, take a holistic view of the
Hmm.
company, I think public market has its value as well. So
Okay.
there, it's all about what calls you're making, how are you making, how accurate you are in making the
In
calls.
the pricing, yeah.
Yeah, like Fidelity and all never paid you for writing research reports. They ranked you based on what how much value you're adding,
Yeah.
how easily you are available when needed. Like if the company is going under, the stock is crashing, they used to tell us, don't hide under the table. Get out there. Get on the trading floor. Talk about why it's going down. Call your key clients. Tell them why it's going down. Don't panic. Let them know. That's when they need you. So don't hide under the table. So that's a big point. And all these
Hmm.
big shops like the Evercore and all that, we had the big sales guys come during lunch hour and present for an hour as to what's important. And the main
Okay.
story on the public side was tell a story. Everybody has information, and it's becoming increasingly so. Now, with the ETFs and all that, the public markets have become very challenging for analysts because nobody is
Okay.
buying single stocks anymore. It's more about ETFs and funds and all that. So that has a challenge by itself. Okay, so but that's a different story. Of course, there are still making commissions and all that.
Okay.
But on the private side, it's more thematic. The AI theme right now, the grids, electric grids is a big thing. The
Yeah.
batteries and EVs, and there's so many themes playing out right now. So I think we need to go deep onto that. Now
Got
the
it.
big focus is, especially for me, is the applications of AI. Now we saw the foundation layers, the infrastructure layer is still going on, the Nvidias and all that. But now we need to go on the what? Who's going to make money? How are you going to make? How are you going to monetize AI? That's a big push. So we're looking for ideas on that side. That's
Got
our
it.
research.
You touched upon this, and I want you to continue it because let's focus on the private markets. As you said, it's more thematic. So, right now, if I have to say that a research function within the venture capital market is much smaller than the public market, I think you would accept it, right? So,
Absolutely. Yes.
and it will grow definitely, it will expand, and just by the nature of the maturity of the market, the bigger companies like Manhattan Venture Partners and all the bigger VCs and so on, they already have research embedded within their ecosystem of the company. So if, for example, the mid-tier VCs have to look at research function, how should they expand on it? How should they develop within their VC companies and so on? And I think you touched upon this. So, the idea is to have themes, idea is to kind of dig deeper and so on, and expand on what is going to be more relevant. Maybe you can explain a bit more about it.
Yeah, I think the one thing that I had to adjust to as well, and my initial reports used to be like a big section on valuation. And that's then someone pointed out, in fact, it came out in one of the big publications. What is you don't have audited statements. You're making valuation calls on something that's you're making your own judgments and all that. So then it was a wake up call for me that valuation is secondary. At this point, people are investing in the technology, in the future, and you don't even like you get all these funding rounds where a company has 10 million in revenues, but it's valued at 2 billion. So with 10 million revenues valued at 2 billion, something's not, there's a disconnect, because they are looking ahead 5 years, 10 years. They're looking
Mhm.
for the next Facebook, the next Google 20 years out, the next. So they're valuing based on that. Even this open AI is now valued at 150 billion or whatever, not because what they're generating now, there's barely
Very
any
sure.
revenue now. Is they think it's going to take over the world. Everything is going to be AI. So they got in early. Now, if you get in, you're going to pay
Mhm.
so much. It's too late. It happened
Mhm.
to us with Uber and Lyft. Uber, we couldn't catch it. Just going on and on. Every day it was moving in increments of 10 billion, boom, boom, boom. So we invested in Lyft. So Lyft did well initially also. In fact, the IPO was more successful and everything. But then Uber initially was chasing every shining object all over the world. So there too many losses and everything. So they had the scale, but they didn't have a line of profitability. Lyft had a line to profitability, clear line, because they were US based, intermodal transportation, did this and that, all the right stuff. So we invested there and we came off well. Our LPs were happy when they IPO, but Uber was a different story. So things like that. So you have to really get in there and give a good theme as to why. Like some guy used to call me and he was like really after me. He thought my valuation, my thesis was horrible, was wrong, it's fake. Because and for some reason CNB used to call me every time to defend Lyft when they did the IPO and all. And I used to go and say, so his point was, they'll never make money. You got to pay the drivers, the insurance, the this, the that, the petrol, and the drivers, nobody makes money in that. So, but at that time it looked like that. And plus the regulators were
Okay.
on their back, nobody wanted them, the taxi guys were on. But we said no, it is going to be a winner in the end, which it turned out to be. But it took a long time. Initially, it was down and up and up. So things like that. So you have to get into the theme and forget about the valuation at that point. You just focus on what's the story, why Lyft, why Uber, why OpenAI,
Mhm.
why SpaceX. You got to give that clearly, that thing, and only then people will understand. But
Okay.
now what happens is these companies, as they mature, we found that companies, the investors that get in at Series E or like towards the later round, it's very tough to get 2x, 3x after that. I think these people just want to get it on their portfolio. And there was a fear of missing out also. A lot of people, a lot of general partners, they would get a yelling from their people or whatever, why aren't you in this? This was so
Mhm.
obvious. How did you miss out? So everyone wanted it on their website that we are investors in this. So things like that. So there's a lot of chasing also that goes on, and that spikes up the valuation towards the end. And so that's why when it comes into the public market, it's already fully valued, it's overvalued many times. So then you have
Okay.
to wait for it to marinate, for the sales to catch up, and this and that. And like Palantir, only now it's really coming together. It was like
Yes.
struggling for so long, but we
Yeah.
knew it all along. I covered for like whatever 5 years, every angle. Got a lot of beating for that because it wasn't doing anything, but we were saying it's great. And the company used to send investors to us. They said, "Go, this guy has written some good reports. Go and talk to him." So we used to do that. But then there's a lot of it's not a regulated market, right? The private market, so there's a lot
Yeah.
of phony stuff. Like one guy said, "Oh, I got this inside stuff. This is a great number. You got to go with it. You got to go with it. I know what it is. I spoke to Carp, and he's saying the revenues are going to be so much." Turns out it was wrong. Everything was wrong. So then I stopped taking any calls from them. I used to do my own research
Okay.
and things like that. So a lot of that
Okay.
goes on. But you have to have some fundamental basis, good basis, and that training I got from the public side, and that's important.
Got it. Santosh, one thing that you mentioned beautifully is that it's a conviction game, right? So research drives convictions. So, for example, if we talk about themes in venture, you have to develop conviction around themes. Let's start from themes. Once you have developed a theme based conviction, you dig deeper. Let's say AI, you have multiple layers, application layer, infrastructure layer, and so on. Then you dig deeper into those two layers and develop more convictions on like those separate topics. Then you maybe dig deeper and develop convictions into the companies themselves which are focusing on infrastructure application and so on, and there might be like hundreds, right? So investments is all about conviction game, and what research kind of enables in a good investor is making their convictions stronger, right?
Yeah, absolutely.
Yeah.
It's on paper. People can talk and get away with it, but when it's on paper, they can go
Yes.
back, refer to it, and everything. So you get a lot of those guys. Just talk is cheap. You just go on. You're not on record. Hey, I didn't say that. I didn't say that. But here it's on paper, so they have something that they can take to their whoever. What do you call the portfolio manager or whoever is making
Yeah.
the final decision? They can take it. Then hey, let's do it. Let's pull the trigger. So things like
Awesome.
that. The research
Yeah.
helps in that sense.
I mean, I want to talk about the skills now, skill sets. So, what skills do you think are valuable in research function? And what skills are you looking for when you're hiring somebody in your team, for example?
Yeah. And before we get there, I think research is two parts. One is you have to be good in your fundamental stuff, which is the writing, reading, synthesizing information, tons of
Yep.
information, and making a cogent argument. Second is marketing. You need to get your ideas across. So
Yep.
you are a marketing guy at the end of the day. You can be the best writer, but nobody cares. You got to take that and market it, market it, market it. So that's a big thing. So in terms of the skill set that's needed, is definitely you have to love the investment process
Mhm.
and love the idea of studying new technologies before they become household names and see how it evolves. So try to understand the nitty gritty of that. So that takes a lot of reading. My day starts off by reading about 10 journals. Inside Out, of course, Wall Street Journal, that's a must, just to kind of get a sense of that. But that also is becoming more and more useless. Due to old habits, I read the paper product, but now it's all online. So Darren's and all that, we keep in touch. So just try to look for nuggets of new incremental information. Many times it's everyone repeating the same stuff that others are writing about. And
Mhm.
there's nothing new. So New York Times is quoting Barron's is quoting TechCrunch. It's like crazy. The same thing is going around and round and round. So you go to some original thinkers. You read some blog reports, look some industry journals, read The Economist to get some original ideas from somebody. And you may disagree with that, but just kind of get a perspective. So a lot
Mhm.
of reading, good quantitative stuff, modeling and all that. Modeling is not that important on the private side. The information is light, but you have to have a rough idea as to. But sometimes what happens if the company is very late, they're almost like public companies, like
Mhm.
Airbnb. It was almost like public company. I could build a full, complete model before they even IPO. And in fact, we knew the CFO of Airbnb. He said one day that I give your report to these bankers who come to pitch their services to me for IPO. I tell them read this because I could read the whole thing, and then I had the full information was out there. They used to put out a lot of stuff in terms of rooms rented and yield and this and that, so I
Yeah.
could build a model, and I had a valuation too, things like that. So if it's a late stage, you can do a full model. So you should know your DCFs, you should know your comparative multiples, market multiples, and then kind of adjust the revenue numbers, build a revenue model, and project it out 5 years, 10 years. So the same principles of private, public go into private. But here, the information is limited, so you don't have to go too deep in the sense of ratio of turnover, turnover ratios, and all that stuff. You don't need to go that deep because they're new companies, a 5 years, 2 year old company, 3 year old company, just breaking in. It's all about the future. So your job is to really to take what it is, understand what they are, and then see how companies kind of on the adjacent markets how they progressed
Mhm.
from IPO to next 5 years, and try to derive some multiple into your space. Say that, okay,
Got it.
in 10 years, we think it can command EBITDA of this. So if we apply a company X's 20 times EBITDA, which is kind of adjacent but kind of same in the SaaS model and all that. So if you take that and apply it here, so 5 years from now, you can expect this company to be valued at such and such a level. So the upside is tremendous. So things like that you
Got it.
can connect the dots and just kind of connect the dots essentially in
Got it.
mosaic.
Maybe a question which is adjacent to it. If there's a newcomer who wants to start his or her career in the research function, what's the one piece of advice that you would give them?
Yeah, definitely. When I was looking for a job, they used to say that if you have an idea, write it down cogently and send it to an analyst that you want to work
Mhm.
in the sector that you want. And they will be more than glad to. See, in the beginning, the worst thing you can tell when you're looking for a job is say, I don't like writing. Writing is the essential part of research. You have to put your thoughts together, and that's what the senior analysts delegate that to junior analysts so they can go around. Writing reports is important in terms of kind of keeping the things going and all that. It's more a marketing piece, but at least it keeps the thing, thought process, discipline, and all that. But you should be able to write a lot. I would say, look up the idea. If you like something, just send your idea to somebody. Let's say you want to work as a consumer products analyst. Send your report to a Goldman's consumer product analyst. So he may independently look at it and say, you know what? Yeah, why don't we meet for coffee or something?
Okay.
So it happened to me too. I was circling I was on the finance side, corporate finance side. I was not in research. I wanted to be on research, but
Okay.
then I was circling the wagon here. But then suddenly one position opened up. My friend who was working there, she moved to the REIT side. And she said, hey, why don't you go and call him and take up the paper and forest products associate
Okay.
analyst? So I called. So he said, okay, what do you do? He wanted someone with a strong accounting background. And that's what I used to do in my job there. So I sent him what I did. Then I came there and he gave me a test. He said, okay, write about this thing. So I wrote about this thing. Okay, you're hired. So I kind of circling the wagon within Prudential, and the HR lady who came, she was on vacation at that time. She said, "How the hell did you get into research?" They were like,
Wow.
because this is such a tight thing. They only take Ivy leagues and all that, or whatever the stereotype was at that time. So, but Mark liked me. Boom, boom, boom. Right place, right time. That applies everywhere. But on a very
Yeah.
fundamental basis, you should be able to write. You should be able to think. Basically, you have to be a thinker. In
Deep
coming
thinker.
from deep thinker, because you have to have ideas. And I'll tell you why. Because I came from the operations side, where you're more
Mhm.
reactive. Like there's a project that's due on the end of the month, the reporting project, So there was no real independent thinking. So I
Mhm.
started a research job, and my analyst one day came on, has anybody taught you how to think? I'm like, what? What are you talking about? You gotta think, new ideas. Like we used to be like listen to a conference call, and he used to go around. So what do you think? I said, what do I think? I don't know. He just spoke, I took a few notes here and there. No, you gotta listen and come up with the thought. So that thing is there. In research, you gotta be think on your feet. Fast, fast, fast. It's not a reactive job. It's like boom. And the time span is the shelf life of any idea is very small, very
Yeah.
short. So you got to think, write, publish, boom, and let the traders make profit in there. Because if you wait 1 month later and write a great report, nobody cares. Only who people care is the business development guys of companies who use it for their own thing. But for
Correct.
trading guys, investment banking, time is the essence in research. Everything is time bound. The shelf life is very time bound. So you have to be fast.
Thanks for these advice. Absolutely love them. So I want to move to the personal side, and I'm mindful of the time here. So how do you motivate yourself on tough days? Because in research, there's obviously a lot of ideas which come in, and a lot of ideas might not be successful in the end, and so on. So, how do you motivate yourself on tough days?
Well, you just stay on the game. It's like, there are some tough days. Your calls can go wrong many times. That's the toughest part. And you are humiliated many times in public. So you said it's going to be here and it's here, and that happens a lot. So, but you have to just be disciplined and go on. If you believe in your thesis, don't say anything that is out of line. Present everything that has a basis, and they will
Yeah.
appreciate that. Even the portfolio managers don't care if you're right or wrong. Give me a cogent thesis, because many times what happens, some guys are bullish on a sector, okay, on a stock, but they will give you the bear case. They want to hear the bear case. So they will come to you and say, "Oh, I hate this company, and I just absolutely." So I know you hate it too. Tell me why you hate it. So then you say, "You know what? This is boom, boom. Okay, great, great." He writes down, and then of course he's bullish on that. He'll disagree with you and said, "Okay, I'm staying bullish." This guy's full of shit. He
Okay.
doesn't know what he's talking about. Things like that. So a lot of games go on, but you have to stay to your theme. Have a basis. Don't wing it. Like hey, if the wind is blowing this way, you go this way. You're a man of convictions, you're a man of ideas, and boom, people come to you because they think you do your research, you do your homework, you have the facts right, and you form an opinion. That's important. That reputation, once you lose that, forget it. Nobody cares what you do.
Got it. And one last quick question. So I always ask this question in the end is one interesting inspirational thing, idea that you might have heard, read recently, which is maybe it can be outside of the venture space as well, outside the research space, you would like to share with the audience. What would it be?
Well, there was a lot of talk. I mean, staying in with my space because that's the world I deal with so much. So there was a lot of talk about how the IPOs have dried up and this and that. And in fact, I think someone asked me in the meeting also somewhere. So I said the secondaries are the new IPOs. So so that's how you're getting your exits right now. So all the early investors, they're not waiting
Yeah.
for IPOs; they're going to the secondary market. So I said secondaries are the new IPOs. So we don't have to wait for the IPO window to open. Things go on. So I thought that was well received and they're very relevant to the time and space at this time.
Thank you so much, Santosh, for joining in and clarifying all the topics about research. Loved your ideas, loved your inspiration and your journey as well. Thank you so
Okay.
much.
Thank you.
Take
Thanks
care.
for having me. Take care.